Good morning. Bruce here. Gonna give you an update on MSTY and Mr. and then I'm gonna do Coney as a separate, and then I think I owe you GDXY. As you probably saw the previous evening, I put out YBit. Okay, so let's jump in here and see that we were down 3.38% on Mr. MicroStrategy. And furthermore, we were down less, I'll note, half of that amount on MSTY, because we certainly weren't capped, although I was worried a little bit about these weeklies at the time. We had a 1720 with our bulk, and we were around 1680, I think, and we closed down to 1618, and we went down from 3508 to 3448. So again, those numbers are right here in May, right? Down to 3448, down from 1675 to 1618. So there were 3 trades. These were the information on the trades. Whenever you see 3 and they're all the same number on these long stocks, right? The only bear stock is Crash for Tesla, so that doesn't, you'll see a different way they do their calls and their puts, but we'll just stick with what everybody's used to, especially on these long stock methods. So they bought 23 calls at 277 because they're above the strike price of 1540, right? And then they sold short 23 puts. That's 23 contracts, right? Times 100 shares times this price. So it cost them money. Cost them about $1 million, I think, the delta. I'll have to check it, but that's what I recall. And then they sold short 1770s, but they went out to 607. You notice the 240607. So they always do those on a weekly. With 2 days remaining, they saw fit, and that was smart, to go roll it out to the following week. All right, so let's see what it all brought us. So we got 4150. You can see that from the sheet I showed. I color-coded this to distinguish here between the ones that are going to expire in 2 days and the one for next week, right? So they collected an additional 95,000, right? They don't have any liability against it at this point. When they close it next Friday, you know, they'll know if it's a winner or a loser, but we know along the way by book value and what's it trading at, right? Whether we have a paper or a loss or a paper gain. So what did they do in shares after having a massive 475,000 shares added? They had another 50,000 shares, right? So that constituted their activity for today. So let's go take a look at our synthetic, right? So we had the bigger day on 528, and we came back out here today, and they sold something for 638, right? Or I'm sorry, they bought, right? They buy the calls and sell the puts. So this is a positive number because you're expending, and positive is counted as a negative. So they're spending money versus collecting money. So they only collected half of what they spent. So that increased, okay? And when I said $1 million, I was wrong. Yesterday it cost them $1 million, but because the volume of contracts went down, it only cost them about 300,000, a little less than 300,000. So our loss went up to 3189, and formerly it was 2927. So that results in a loss. This down here at the bottom is actually a gain, right? So when we're buying and selling it, we can lose money along the way, but when we're just holding this stuff, we're over the strike price, right? Where we closed at, let me update this, 1618. So we're above it, but not at the same level. We're only 5% above it. So our 14.5 million dropped down to 9.3 million. So this is our paper gain, right? So let's go and look at our weeklies, right? So you saw we put on a new trade. So I need to update. Whoops, I did not do the 23 new ones, right? So we'll do them in white. And this is 1770 also. And I'll put my formula in there. And this one will be 6724. Okay. So everything's good there except for this formula, and it'll make it blue, but that's all right. And I gotta tell it the right location. Okay. So we look pretty good, right, in the sense that these calls are now from where we were yesterday. I was worried about the being endangered. I feel much better, right, about not having a problem. And let's make this white. It just keeps staying as a white box when you don't click on the right. I'm not going to worry about it at the moment. I'll just make the text a dark color if it wants to play that game with me. And I'll leave it like that for the moment. Okay, so we're 9.35% out of the money on this one for next week. But these three all look pretty good. Look at where we are. So we can go up 100 points, 50 points a day and not outrun the bulk of our contract. So, you know, you take a deep breath, you sigh of relief a little bit. Doesn't mean we couldn't run by it. But again, even if we run by it, we make it up on the synthetic, right? It's just that we lose on the weekly. Okay, so let's take a look at our holdings. Nothing else here really to talk about other than this 7 and 9%. Obviously we're better, but that's only 80 contracts. This is a small bit too. So hopefully when they roll this one, they roll it out at 1770, 1800. Depends on where they close the week at. If they close the week at 1620, they can do a 1720 or 1740. Okay, let's take a look at holdings. So again, we moved up 50,000 shares, which was a little more than 1%. Now, with us dropping down, these weeklies are all doing much better. We had a negative over here. We had 2.7, and it was going to cost us, 3 or 4 million to buy it back. But since we dropped from 1675 to 1618, all of these 1700s that are going to expire all got low numbers. Some of these, this was 30, this was like 18, this was like 13. So when they drop down, you can see that, we sold this thing for 32,000. We can buy it back for 9,400. We sold this 124,600. We sold it and collected the money. We're going to buy it back for 45. This 2.6 million, we could buy it back for 935. Now, ideally, we don't pass 1720 and we buy all this back for a penny and we keep 2,759,000 plus, right, of the 2,760,000. So we've captured 64.10%. So let's talk about our synthetic. Our synthetic gain dropped. We had a 14.7 million gain, I think. Oh, actually, this tells me it's the previous day. 14.1. And excuse my dates because this should now be, I didn't update it, 529. This should be 528. Right? So I'm not going to take your time, but just knowing that those needed to be done. The important thing is, what's our NAV value according to them? Well, we closed at 34.48 for MSTY. They're saying fair value based on the NAV and the shares outstanding is 34.40. I'd call that somewhat of a wash, right? How we looking then? So we look to keep our gain. Well, let's go take a peek. We talked about this, right? Let's go take a peek at our payments. That's the key, right? So our synthetic in summary is now 9.3 million. So if they had to roll that, they could. But we're in a situation where we've got a $3 loss over here on our short call income, right? We're almost 5 million shares, so that's almost 15. So that's why the 3 million, right? That's come down because the share count has gone up. We also came down on our total income, right? So our total income was 4 million, right? So we've got $4 on, I'm sorry, that's not our total income. That's our, yeah, it is under the total, but what it really reflects is this number minus this number, right? It's the way it's set up. So we really have $4 over here in synthetic income that we could use to pay out, right? Because we've got a $3 loss here, and this is almost like a $7 gain, right? So when you take 7 away from 3, this is a standalone income that the synthetic is got free and clear. So in certain situations, I always clarify that, right? They have no money to pay us in what they call their traditional payout. In no way are they going to look at MSTY with $4 and $2.50 and a high yield and say we're not going to pay anything, right? All the people would sell it, not buy it anymore. So they've got $4 of actual money that they could use, okay? They're not going to use all that money because last time they had 241 and a gain, and they paid a little bit extra, 11 cents extra. And they didn't really have it, but they paid it. So I see them somewhere between $1.50 and $2. It depends on what happens, right? I think we'll get to $2. I say $2.20, but my gut right now, if I had to pick a number, is $2. And I'll probably put out, what's today, early Thursday morning, I would put out a spread, put a video out on my predictions for everything Friday night probably, because I'll know what they did on the weekly, and I'll give you guys my best declaration guesses, right? On all 4 that I track and any others that I'm watching and I'm knowledgeable enough to do it on for you guys. Okay, so that's what's happening in MSTY. Coney to follow. I mean, I'm going to do them separate, but it won't be long before I post it. I've done all my analysis already. So that's what I got for you. Not as big as it's been, but if we get our $2, that's still pretty good, right? Pretty good. If you did that. Oh, by the way, and I watched some, I'll save it for Coney. It has to do with Coney, so I'm going to do that video. I'll just tell anybody in MSTY that watches Coney and also owns it, you won't miss it. If you want to know what I'm going to talk about, it's the road to paying out distributions that equal what the fund started at, right? So Coney's approaching that $20 mark by August in payouts, which is pretty cool. Everybody always talks about NAV reduction. Well, how about when within a year of launching, you get all your money back in dividends, right? And you still got the paying asset. And in this case, if in August Coney's 23, it's $3 more than where it started, plus you got $20 back. Okay, so I told you anyhow, but I'm still going to repeat it in Coney. All right, so Bruce signing out. Again, this is not financial advice. I'm not a financial advisor. It's for fun and entertainment. Hope you were entertained. Okay, see you guys. Bye.